I really think, and our strategy is very focused on being well placed to capitalize when that 76 billion comes to fruition. And I think, there is a lot of uncertainty of timing, what states will come on. I really think that 12% of the population being exposed to iCasino is a drop in the bucket. Even if we double that, we're going to see significant increases in what we can achieve in the US. So that's very unique about the US, a lot of untapped opportunity. And we're also seeing this in how well Sweeps is performing in the US, that there's a huge demand for online play and not necessarily sports-led online play. So I'll say this anecdotally, I don't know factually, but my suspicions are that most of the players who play in the Sweeps world are not traditional sports-led acquired customers. So there really is a lot of untapped opportunity.
This podcast is sponsored by Pragmatic Solutions, the player account management platform chosen by today's smart betting and gaming operators. Don't let technical constraints delay you from achieving your business goals. Expand your business, boost your margins, and dominate the market in any leading regulated jurisdiction with our powerful, flexible, and secure iGaming platform. Enjoy its extensive marketing tools, compliance protection, real-time data, and a wide portfolio of over 1,000 industry providers. It's time to upgrade your technology. Let Pragmatic Solutions show you the modern approach. Visit pragmatic.solutions and join the smart thinkers.
This podcast is brought to you by Pragmatic Play, a leading game developer providing player favorites to the most successful brands across the industry. With an award-winning multi-product portfolio of slots, live casino, bingo, virtual sports, and more, Pragmatic Play is powering up new possibilities of play through one single API. Visit pragmaticplay.com and discover your favorite every time.
Bingo, bango, bongo. We are here today with Robbie Bressler, CFO for Bragg Gaming. How are you doing today, Robbie?
I'm doing well. Thanks for having me.
It's an absolute pleasure here. And we are, in the time of the recording, 2 weeks away from our next New York event that is taking place in Manhattan here. So I thought that today would be an excellent opportunity to dive in a little bit into the future of the US iGaming landscape and its opportunities that lie ahead. And Bragg, of course, is leading the charge on that front. But Robbie, before we dive into that topic, I wanted to just ask you, because in our prep call, we talked about your experience in the industry, and you are perhaps one of the few Americans who's been there since the very beginning of the US online betting and the sports betting iGaming landscape. So can you talk a little bit more about your background, first and foremost?
Sure. And I should correct that I am Canadian, although...
What an insult I started off with.
No,
I apologize.
I'm a bit of complications between our two countries right now, but I'm a big fan of the U.S. and I think Canada-U.S. relations are going to get better and lots to work together with.
Yeah. Before we dive into that, did you? I presume that you checked out the Four Nations ice hockey tournament, and that was part of your remit. I'm assuming, yeah. That was a good feeling, I imagine. Yeah.
I can't lie on that one. That was a great feeling. We're very passionate about hockey in this country. The U.S. did, our time is limited in how much dominance we're going to have, but good outcome, definitely. So getting into my background, I started in this industry in 2014. Previous to that, I was an auditor at Ernst & Young and heard of an opportunity to join a company called the Entertain Group with John Fitzgerald and Keith Laszlo. Not knowing a lot about the industry, took a bit of a leap of faith, and I could say it's worked out very well. But a lot has changed since 2014. I'd say much more for the better. We started as a B2C company. We acquired InterCasino, which was one of the first online iCasino brands ever in the early 2000s. Went on to acquire various bingo-led brands from GameSys, Vera and John, and Costa Bingo. Eventually, we were listed in Toronto, relisted to the LSC, merged with GameSys, and then we were taken up by Bally's. But through that, saw a lot of cycles of what happens in jurisdictions. The UK went through not being regulated when we first started to being regulated. Same with Spain. The United States, New Jersey was just getting regulated. But sports, if someone told me in 2014 that in 2025 the landscape would look what it is now in the US, I would have said they're full of stuff because it wasn't foreseen to where the market could go. Fantastic that it's gone this way. One of the suppliers into GameSys was Bragg. We were utilizing their RGS. So I was familiar with Bragg, familiar with the people there. And when the opportunity to become CFO came about, I was happy to jump on board.
Brilliant, Robbie. And, just to dive a little bit into Bragg before we dive into the kind of wider topic of the current lay of the land, so to say, in the iGaming industry in North America. But just looking at the market cap of Bragg, clearly it had its peaks and valleys, let's say, in the last couple of years with a huge spike in and around 2021. Obviously, that time was a pretty special time in itself. But since then, we've seen the share price coming back to earth somewhat. And now we are seeing a bit of an uptick again. But can you talk about what led to that big spike and then that following drop in the share price? And talk a little bit more perhaps of the journey that you've had since then to kind of regain the trust of the shareholders and so on and so forth.
Sure. So I think that period of time with COVID, with the opening up of the United States, the valuations, especially in North America for gaming stocks, with high concentrations on online focus, was going through the roof. So the value, the multiples that were being applied to revenue were quite eye-opening, and I think Bragg was just part of that. And it was interesting because we were a London-listed company at the time where our shareholders were very disciplined on expecting good bottom line EBITDA. We were dividend paying, so using excess cash to give back to our investors, very different than what the North American investors were expecting at that time. So I think it largely was because of that. I do think the fundamentals of why Bragg is a good story and why Bragg fits well into this booming North American growth story is sound. I think the valuations got a little bit beyond what is realistic. And I had a sense at that time that the top line focus, and this is more on the B2C side, but kind of Bragg felt that same wave. Once investors started to understand more about profitability, about how market share in states, how GGR can be inflated because of bonusing. So I think the market's caught up to really understanding what's good, sound businesses, what makes sense, what has future growth trajectories and what doesn't. Now, Bragg has continued that story. Even though the valuations have come down, we did go through some various leadership changes. But with Matt coming back into the business about 18 months ago, we've been able to really grab a good sense of where this company is and where it can go. The board did go through a strategic review process in the prior year. And I think that was very helpful for many ways. One, our shareholders really wanted to see if there is enough interest to perhaps take out Bragg entirely and create liquidity for long-time shareholders. But there had to be a reasonable valuation on it. But it also gave us the chance to really learn what are the key pieces and what are the key elements of our business that need to improve to get more value out. And we learned a lot through that. We grew a really solid executive team, and our pipeline really increased. So a lot of factors have put Bragg in a much better position, I think, than we have been in a while. I think that's indicative of where our stock price has performed. By no means are we satisfied with the valuation we're seeing right now, but I think we've been able to articulate a very clear, concise path as to how we're going to achieve our goals and how we're going to unlock value in Bragg from a valuation point of view.
So as mentioned, essentially the founder of the business came back as the CEO to Bragg about 18 months ago as part of these efforts to get the company kind of back on track. Let's say you mentioned the special committee. So the outcome essentially was that you decided to disband that special committee, and no exits took place then. And as you pointed out, you learned a lot through that process. Do you want to dive into that a little bit more? Why did you decide to then disband the special committee? Maybe you can share a little bit more insight of what you learned through that process. It would be interesting to hear, because I think that was a pretty big part of kind of what the shareholders were waiting for, and the big news that came out earlier last year, essentially.
Yeah, so just for clarification, I wasn't part of the special committee, and ultimately the decision to disband it was theirs. But I think a few factors play into this. So one is we were in a year of EBITDA contraction. So we were expecting contraction, and it had to do with one of our bigger customers, that city, where they internalized some of the managed services that we had been providing. So I think that was a factor in having people or companies that were interested in looking at us kind of a bit of a wait and see. It also shows that there could be a sense of concentration with one big customer, which I really strongly believe is not the case, and we're proving that out this year. I also think that we were in a process where we were putting a good, solid, well-experienced executive team together, getting a much better handle of where the business is now, where it's going, and started to get some really interesting inbound pipeline opportunities, which really illustrated that the value of this company has not fully been realized. There's more to unplug here operationally, and it's not a long-term thing. We don't need to have monumental changes in how we do business. Our products don't need significant capital investment. One thing about Bragg, and I knew this back when we were on our RGS, is the products that Bragg have developed have always been tier one, top notch. Where I think we haven't fully benefited is having a very concise commercial strategy to maximize the profitability we can get from our products. And I think testament to Matt's ability to put that team together, get that vision sound. And I think this is really evident in our 2025 strategy, where we're not shooting for the moon in the sense of hitting 5 different jurisdictions. We want to be great in the US, we want to grow our presence there, and we want to be dominant in Brazil. We accomplished both those, which I think we're on the path to do. That diversifies our revenue concentration, gives us more concentration in profitable products, and really sets this company on a better valuation trajectory. So to answer your question as to why I think we got there, I think really seeing where this company can go in the short term really shows that unlocking this value isn't far away.
Brilliant, Robbie. So essentially, the business comes from being kind of top heavy in revenue from the Netherlands and the Dutch market, and particularly with some very strong customers there, to now looking to diversify its revenue stream into the US first and foremost, but then also you mentioned Brazil as well. And I want to dive into the US strategy particularly, and that's what we're going to focus on more today. So would you say, when you mention Brazil and US, it still seems like Bragg is putting most of the eggs on the US basket? Is that correct? Are we kind of seeing Bragg taking a US first strategy?
I wouldn't necessarily say that. So we think the US and North America can achieve about 15% of our total revenue by 2025, the end. So we want it to get to a sizable percentage, but why we're so focused on the US is when we think of how much of the US right now is exposed to regulated iCasino, it's only 12% of the United States. And the estimates for the total TAM of what the US iCasino industry will be in the US when it opens is like $77 billion US. So I really think, and our strategy is very focused on being well placed to capitalize when that 76 billion comes to fruition. And I think, there is a lot of uncertainty of timing, what states will come on. I really think that 12% of the population being exposed to iCasino is a drop in the bucket. Even if we double that, we're going to see significant increases in what we can achieve in the US. So that's very unique about the US, a lot of untapped opportunity. And we're also seeing this in how well Sweeps is performing in the US, that there is a huge demand for online play and not necessarily sports-led online play. So I'll say this anecdotally, I don't know factually, but my suspicions are that most of the players who play in the Sweeps world are not traditional sports-led acquired customers. So there really is a lot of untapped opportunity. Now, Brazil too is an area where a massively increasing market is developing. Although it's already been there, it's more regulating. But all of Latin America potentially could be worth up to 16 billion in terms of total iCasino and sports. That's another massive opportunity, and we want to be well placed for that. So it's not just Brazil. We are putting the foundations into Brazil. We have a local entity set up there. We're looking to do a strategic partnership with a local studio. We see Latin America as another area where we can see significant growth. But on top of that too, there's a lot of jurisdictions in Europe, UK as an example, Sweden, where our integrations are extremely solid. We're integrated with top operators, but we really haven't pushed the needle on just moving our market share up a little bit. And we think that's achievable as well. So to answer your question, I wouldn't say we're US first. US strategically is where we see the most opportunity in the near term, and we want to be best aligned to capitalize on that.
Yeah, but of course, in the US market, it's predicated on states legalizing for iCasino. And this has, of course, been the premise in that market since a couple of years back. And the hope, of course, has been that more states would regulate for iCasino, which has not happened yet. So the question is, what gives you hope, Robbie, that we'll see several states legalizing for iCasino in the coming years?
Yeah, it's a good question. So a few factors. One is you're seeing in the states, like Pennsylvania as an example, where both are legalized, iCasino and sportsbook. Sports is growing at a iCasino is growing at a much faster rate. I think in Pennsylvania in January, the results just came out. GGR for iCasino was up like 42% and sports was down 13%. So operators are seeing how fast iCasino is growing. What's great about iCasino, and I really come from the iCasino world from GameSys, where we were at that time just pure really slots and table games and bingo. You're not susceptible to outcome fluctuations. So the margins are more consistent. Your retention could be better. Customers are coming for more of an interactive experience on the iCasino side, in my mind, versus just coming to place a bet, which is much more the sports-led player who just wants to place a bet, and that's why we're there. So I think that that being seen by operators as being such a solid path for profitability. Also, I think there's also more opportunity for new players to come in on the iCasino side, where the sportsbook side is much more stuck with their top market share participants. So I think the lobbying is going to increase. Long-winded way to say, I think lobbying from the industry is going to increase. There's always the notion that it's cannibalizing land-based operations. I think hopefully what's being seen in Pennsylvania and other states that have both, that's not really playing out, that there's not a huge amount of cannibalization. And if local casinos can embrace this, it could be good for everybody. Another factor is sweeps. And this may be a little bit more far-fetched, but I think the best way to kill sweeps, which is something that regulators are looking at, is to regulate iCasino. Players will not get the same experience playing in a sweeps ecosystem than playing in a regulated iCasino ecosystem. So I think sweeps is showing states how big of a market is just sitting there, the opportunity to tax that, and a way to kill it essentially is to regulate iCasino. Now, that doesn't discount all the social considerations and all the other lobbying issues that come up in getting iCasino regulated, but I think it helps, and it opens more eyes and opens more minds. And then lastly, I am Canadian, but I do follow American politics quite closely. I do think there is this desire from a top level to increase the size and scale of government and cut spending. I think that expectation will probably trickle down to states. Some states not so much, some states more. And I think iCasino will be looked at as a way to increase incoming revenue without really having to do much from a cost point of view.
Absolutely, and just to hammer down that point, we saw, of course, Donald Trump Jr. joining the board of Calci and inputting new, very friendly regulators in the CFTC to regulate that niche of the industry who's trying to kind of break through. And from that perspective, you would imagine that we might see some more friendly regulation towards iCasino and sports betting as well. Also, just on the point you mentioned of the best way to regulate iCasino is, the path to kind of destroy the sweeps segment of the industry today. And, we saw in California the two mortal enemies coming together, right, with the tribes and the regulated sportsbooks who actually sat on a stage together to discuss this very topic of taking down the sweep segment and joining forces. And so maybe sweepstakes is the necessary sacrifice lamb in order to get the two sides together to figure something out in the great state of California, for example.
Yeah. Look, I'm so impressed with I'll just park the legality of sweeps aside for a second. The fact that this industry is so innovative in finding new ways to offer casino-type products into new jurisdictions and work with the frameworks to be able to do it, it's very impressive. And that's what's so great about this industry is we're always reinventing and thinking on how, sweeps didn't exist 5 years ago, and now it's multi-billion-dollar thing. And commendable to the minds who have the innovation. It's just, we need to work it into a regulatory system, and hopefully it leads to more iCasino, and that innovation comes into just getting more players playing who are not that traditional sports-led demographic.
Yeah, 100%. And so, Robbie, that landscape doesn't interest Bragg, let's say, the sweepstakes segment that is growing so much. It wouldn't be a segment that Bragg is interested to work with?
Not really. One thing that I've been watching sweeps very closely is I wouldn't expect investors to put much value on that revenue and EBITDA stream because it's very questionable how sustainable it is. So we want to be focused on the revenue and EBITDA that is going to be viewed most favorably by investors. So it's not something really in our critical path to achieve the higher values that we think we can get. But, it's something we look at closely, and we know a lot of the players in the industry. And if the right circumstances and, the right legal framework, and if it was in a regulated situation, absolutely. And our products could resonate in that vertical. But the situation right now, I'd say no.
Yeah, exactly. Still a gray area, let's say, and still to be settled what's going to happen on that front. Don't you think, though, Robbie, in the sports betting side of the industry, the market is somewhat settled on a duopoly between FanDuel and DraftKings that owns almost 80% of the total market share today in the US. Don't you think in the iCasino segment, should more states open up, that we'll see a similar kind of outlay of the market where those two giants just kind of sweep in and take over the entire market? Wouldn't that be a threat to you guys as well, let's say?
I mean, yes and no. I mean, what's important for Bragg is that we're integrated and we're working with the top operators. So how market share breaks out isn't totally critical to our success as long as we have the relationship with the top operators. But it is interesting how quickly the U.S. sportsbook market kind of got to the top leaders and the market share was divvied up so quick, and really the barriers to entry for new participants become extremely hard. So surprised how fast that happened. And I wouldn't think there's going to be any new entrants in sportsbook in the US anytime soon. iCasino, though, I think there's much more opportunity to acquire customers beyond just sports-led. So I do think there's an opportunity for new brands to come in. I do think a brand like Caesars, where I believe they're becoming more focused on the iCasino side than the sportsbook side, they definitely could outperform their ability to gain market share on the iCasino side versus the sportsbook. They have a really good landscape of land-based casinos that they can draw from as more states open. So I don't think it's necessarily going to be dominant, because I don't think the entry point for iCasino is just sports-led, where FanDuel and DraftKings really is a sports-led acquisition premise. I think there could be Bingo as an example. I think Bingo has been, speaking a little bit back to my GameSys days, but using Bingo as a way to acquire customers and get them into your ecosystem, into iCasino, could be a really interesting strategy. I think it's been tried a little bit in New Jersey, but there's a big opportunity, I believe, in North America to really get focused on that. I know in Ontario, it's actually a unique setup where you have to own a land-based hall to get a license to offer iBingo. So I think there's a lot of different ways you can enter the iCasino market, and I think it could lead to new entrants and a different shakeup on market share.
Yeah, on the bingo side, this was a proven acquisition strategy in the market of Sweden, right? Like you were part of Vera and John, right, which was one of the biggest bingo brands in Sweden, and that was very much an acquisition channel to funnel players over to the other products, right? So it's already a proven acquisition strategy, I would imagine.
Yeah,
and it's a different demographic.
Yeah, UK especially, and I think if you think of the player who is going to go to a site like Vera and John versus go to a site like FanDuel or BetMGM, they're not the same person, and they're looking for different experiences. So yeah, I think it's an effective tool, and I think again, as more TAM opens up on the iCasino side, I think there'll be more investment in other verticals to bring in iCasino players.
Yeah, it's a really interesting differentiation so far between the US market and, say, many markets in Northern Europe that are more settled and have been there for a longer time, where the multi-brand strategy in Europe is a proven and tested strategy to attract many different type of demographics. You have, a company like Betsson, for example, where I used to work 13 years ago. Rather than only using the Betsson brand, they would launch, 15 different brands that are all targeting different niches and different demographics. Whereas in the US, you have DraftKings that kind of operates with that brand, right? Although they did acquire, of course, Golden Nugget for that very purpose, right? They had a very strong demographic of iCasino players. But maybe that is the point, and maybe that is the kind of next phase in the US market, especially on the iCasino side, that can attract many different demographics. And at the end of the day, on the iCasino side, the product is commoditized more so than it is on the sports betting side, where the technology is much more important. And again, you are speaking to a pretty harmonized demographic of sports bettors who tend to be that like male 21 to 40 kind of demographic, let's say, sport interested. Whereas on the iCasino side, you have many different demographics to target and many different type of strategies. So that would be the opportunity then potentially in the US side once more state opens up.
From a Bragg point of view on that, we very much understand the customer journey on the iCasino side. So although we are a content provider and we provide content to operators, and traditionally the player journey is seen from an operator point of view, we think about player journeys. We think about lifetime values and how to maximize that through our content and through tools that we have to keep people in the operator's ecosystem. So Fuse is an example of a layer that goes on top of our content, and it could go actually on any content that's flowing through our technology that really helps retain customers and maximize lifetime value. So these trends that I think will happen in the US, our tech is really well placed to feed into that through a lot of what we learned in Europe and a lot of other jurisdictions where it's been successful.
Yeah, brilliant. And also, I think is to hammer down this point a bit further also is that there are already successful examples of these hero brands on the casino side that are targeting a specific niche. And I'm speaking to Justin Park, the founder and CEO of Betty, tomorrow actually. And he is one of those like wonderful examples of it is possible to kind of go toe to toe with the giants and carve out that opportunity in Betty that, are targeting the female demographic specifically, doing things differently and being very successful at the same time. So that opens up for more market entries, of course, moving forward in the future for sure.
Agreed.
What would you say, like, Robbie, elsewise in the company of Bragg at the moment, what are some of the kind of movements within the company in general? You talked, of course, about the special committee that was concluded at the moment. You mentioned briefly that Brazil and, of course, US are the two kind of growth markets at the moment. What are some initiatives that keeps you excited at the moment?
Yeah, so talk about some high macro things and get into some more detail. So one is, as we announced, a SARS plan. So essentially a long-term incentive plan for our executive team to be aligned with our share price. This is something we worked on quite a bit and wanted to make sure that was issued right after the special committee wrap to really show the investment community that our success is their success in the sense that what we're going to gauge our success and our remuneration is going to be based on share performance. So strong alignment there. And then that's really making sure our strategy's in line with what's going to bring most value. Now, through what we want to achieve, the cadence of game titles that we want to put out in 2025 is almost double of what we did in 2024. So we're spending a lot of time making sure that we have that critical path. The actual development of games takes probably less than the certification time. So it's, which is a little, but we have to be very strategic. And, if we want titles to come out, we got to plan well in advance. And we need to be working well with our certification partners to make sure that happens. There's a lot of inputs that go into what content gets developed, what's going to resonate in what markets should be prioritized. So we are daily making sure our priorities on the content output side are aligned. And we're also making sure we're listening and reviewing the data that we see. And we see a ton of data being on the PAM side and on the aggregation side. So making good insights using tools like AI, which we're in a process of hiring some strong talent on that side. So we can utilize all our assets to have the best outputs and ultimately have content that's going to work for operators.
Brilliant, Robbie. And then back to our US-focused centric question. Again, you obviously have a pretty unique insight into the industry of the fact that you do distribute games. You build your own games, of course. You have your partner studios, but then also you partner with third-party studios as well, and you integrate them into operators as well. So do you have a feeling for kind of the new entries into the US market? Are third-party game studios interested in launching into the US market at the moment? And do you get operators that are curious about entering the US market? I think you have a pretty unique insight in that respect, that you work with both sides.
One thing I guess that's unique about the US market right now is you do have big dominant players. So from a third-party distribution point of view, we do very little because most of the big content providers do direct integration. So most of the activity we feed into the US is either exclusive or proprietary, which is actually a really good thing because the margin on that is much bigger. And we use the third-party content integrations as a good way to get into relationship with operators, but it's really the proprietary and exclusive that we want to push.
That you're pushing,
I think in terms of what we're seeing and what products and new entrants, I think that we're on a cusp of a huge amount of interest once we see some indications of which states are going to open up and when. So I feel like there's a lot of interest on the sidelines. A lot of companies got spooked with the cost per acquisition. I don't know what you want to call it. Call it sweepstakes, or call it basically you're at an auction house outbidding the other operators. So that cost of acquisition that came into the market originally versus the mindset of a lot of European operators, and I had that same mindset of, okay, CPA cost of this, lifetime values of that. How does this make sense? We can't acquire this and have a sustainable business, and you can't get operators who have that mindset to change that, which I think ultimately is a good thing. But I think once there's a bigger TAM to go after, CPAs become much more reasonable. And on the iCasino side, there's many more areas to acquire customers. Again, it's not just sports, spots. There's a lot of different ways to acquire customers outside of that. I think that brings CPAs down, and I think that's what's going to get new entrants into the market.
Brilliant, Robbie. And just moving down to Latin America a little bit as well, I would like to hear a bit your thoughts on the markets down there and the various markets within Latin America, of course. You mentioned that Brazil is going to be another big push for Bragg. Can you talk a little bit to the efforts so far in Brazil? What have you learned? Have you found success already? What are your expectations over there? And then just perhaps more generally about Latin America as an investment case as well.
So one thing I've learned a lot about is tariffs and protection of local economies. So Brazil is very focused on making sure that supply happens within their country. And if it doesn't happen within their country, withholding taxes are applied. And that could be up from 15 to 30+%, depending on how you're set up. So a lot of we kind of had two streams of work. One is we have a good presence in pre-regulated Brazil. We wanted to make sure that we can move over into the regulated world with our customers. So making sure we had the regulatory clearance and we had the setup done. So the legal and finance setup was making sure that we had a mechanism to supply in that's not going to be very punitive to the operators. So there's very little supply that's actually coming from Brazil from a content point of view, but we're able to establish a presence there and we're able to structure so we can bring in operators under our setup and the impact isn't too great. So that's one thing learned a lot about. The other is, and this is a challenge in a lot of markets that go from pre-regulated to regulated, and I think it's getting somewhat harder as the kind of crypto deposit and withdrawal world increases, is actually getting people into the regulated world and making the regulated world attractive enough so people don't feel like they want to still play in the black market. And I think Brazil's doing the right things to do that, but there's always can be more. I think the more they can do, the better for players, better for operators, better for their tax structuring as well. And I hope that it services as a good model for other regulatory initiatives that are happening in other countries in that region.
Yeah, absolutely. And this is, in my opinion, the biggest trend of the industry and globally right now is that this really is a divide in the industry between the operators and suppliers who are moving towards regulation and other operators and suppliers who are moving away from the regulation, right? And so far, if we look at the industry today, we can see that those in the black markets and the pre-regulated markets and gray markets are the ones who are thriving quite healthy, let's say, and difficult to control, let's say, crypto payments in the same way as fiat payments and what happened in the US in the 2000s with Eureka and so on and so forth. That kind of thwarted the black market. But nonetheless, it will be interesting to see moving forward if we see kind of like a Eureka 2.0 at some point with some of the crypto operators.
Yeah, and what I think we're seeing is regulators understanding how supply is occurring and being a little bit more interested in understanding how suppliers are supplying both sides. So
Very good point.
When I look back 10 years ago, regulators that existed were very concerned of what's happening in their borders, not so concerned what's happening outside. That's changed. And it's hard to be dominant or have a real stake in both the unregulated and regulated side. So for us, we actually see, in a way, this is an advantage because we've gone really focused regulated, and we see ourselves as a very innovative, still young company that has lots of innovative ideas and can bring new tools into the regulated world, where a lot of the innovation that's happening, which we would see in our competitors, they're not focused on the regulated world. They're focused on the unregulated, private companies, much more cash to have in that world, not worried about sustainability and valuations from a public company perspective where we are. But I think the advantage we have is we are the leaders of innovation on the regulated side. And a lot of the, I'd say, up and coming content providers and PAM providers are not as focused on the regulated markets. So it allows us to really highlight what we can do and hopefully gain good market share.
Yeah, I think you hammered down on a really excellent point, Robbie. And I mean, we should remember that like local regulation is a quite new thing, right? I mean, U.S. states have just been regulating for a couple of years, and I would imagine that many of those regulators are still kind of getting their head around the industry and how it works and so on and so forth, and trying to keep the regulator operators at bay and ensuring that the players within the regulated space is playing within kind of safe, within the right safeguards and so on. However, many of the regulators have not been thinking too much about the unregulated thriving space, but I think it's getting to a point now where it's getting above surface level. And take Sweden as an example, where the regulators is now telling the suppliers, as you pointed out as well, that if you want to serve our regulated operators, you are not allowed to serve the unregulated operators. And that gives, of course, the suppliers, particularly the game suppliers, a choice. Which do you choose, right? And if you are a major content supplier, most of them, I would imagine, will go toward the regulated space. And that, of course, gives the regulated operators a big advantage against the unregulated space. And finally, perhaps we will start to see the regulated operators kind of enjoying some form of advantages against the unregulated space in order to win in the long term that we are hoping.
And I hope crypto follows kind of a similar thing in the sense that regulated jurisdictions embrace it. I actually was CFO of a crypto processing company before I joined Bragg called FormPay, and we were working with operators and essentially provide a riskless way of being able to accept crypto and not be exposed to any fluctuations. But the more that regulators embrace and make the playing experience comparable to the black market, obviously there's KYC differences that are always going to play out, the better for the industries. And I really hope we're going to enter a phase of regulation where it becomes sensible regulation. So I see that we see this in the Netherlands where deposit limits are being put on, and it's really driving the black markets by doing stuff like that. And I get the regulator's point of view of wanting to have some sort of limitations on people's affordability, but it's a real big black hole, and regulators really should ultimately be focused on protecting their players, and creating an unplayable situation and pushing people to the black market is not going to achieve that. And it's really hard to turn off that black market. So I hope that's the next phase of regulation we see. Not sure when that'll happen, but that's my hope.
Yeah. Like I said, I think in the more mature markets, we're already starting to see movements of the regulators understanding that dynamic. So I feel hopeful as well on that front, I must say, Robbie.
Yeah.
A final question for you here today is I want to just kind of talk more about the investment case of Bragg. And to do that, I want to ask you, where do you see Bragg in 3 years' time? Where will the company be at that time? And again, talk a little bit more about the investment case as a whole here.
Sure. So I see us being well placed, as I talked about, to take advantage of an increasing U.S. iCasino TAM. So that's number one. I see in 3 years that 12% that I talk about of a total U.S. population, I see that doubling at least, and our concentration of U.S. revenue hitting 20+%, if not higher, as that grows. I also see on the PAM side of our business us having tier one PAM or operators, whether they're state lotteries, large operators, and also being a real option for operators who want to go to non-core markets. So they want to launch in their non-core jurisdictions, and using our technology to do that. And what's great about our technology is we are licensed in over 30 jurisdictions. It's agile, it's compliant, and it can get operators up and running quickly, focused on acquisition, focused on marketing, rather than focused just on tech. So I see our PAM evolving into that. And we already have customers with those profiles, but I see that increasing. And I see the potential for this company to be a 50+ million EBITDA company and 200+ million top line. And I do believe margins of a company like ours should be in the 20%. And I think as we execute over time, we're going to show directionally that's where we can go. I will say one thing though, 3 years in our industry is like a lifetime.
It's like dog years, you know.
Yeah, you think 3 years back from now, so 2022, it was a different world back then. So really hard to predict, but that's where I see us focused, and that's really I see the investment case that we provide investors really unique exposure to a very high growth iCasino industry, really worldwide, but specifically in territories that I think are going to really change how iCasino is viewed.
I love the big and bold predictions here, Robbie. This is like proper law of attraction stuff where you put it out there and the universe will work in your favor. So thank you so much, Robbie, for coming aboard here today. It's always fascinating to learn more about Bragg. I'm privileged to be good friends with Matevs, your CEO and co-founder, and it's been great to get to know you as well, Robbie. So thank you so much for sharing the insights today.
My pleasure. It's great to chat, and I'll see you in New York in a couple of weeks.
See you in New York.